Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's talk about what in the hell's happening with the stock and essentially what we can expect moving forward. So with all that being said and done, if you enjoyed the video, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below if you're interested. For $3 a month, I essentially get all my access to all my posts, updates, etc. And I'm also using, premium services, for instance, that I just partnered with for Cheddar Flow, which essentially shows option flow. We'll be talking about this at every single video now. At the end of the video, we'll go over options flow as well to get an idea as to how it's looking and how the sentiment, if you will, is looking as well. And yeah, so if you enjoy, again, don't forget to hit that like button and of course, join my membership section if you're interested down below. By the way, quick mention for Cheddar Flow, like I said, we did just partner with them. So the link is down below to try it out if you want. I also have a code using let me double check the code. Yeah, TTG is the coupon code. You get 25% off if you're interested in, checking it out for yourself and using it for your own trading. Now, let's jump right into it. Tesla closing the day once again, just pretty much just now actually, closing the day down 1.7% at $208.56 per share, which unfortunately compared to the market is yet another underperformance, as if it's just really just another day for Tesla, honestly, right? So let's talk about what in the hell is happening and what we can expect, moving forward. So looking at the 65-minute chart, there's a few interesting things that happen here. The first and foremost is, like I said many times, we are in this downtrend, right? And we're still in this downtrend. Now, the morning did start off a little bit hopeful. You can see, as I'm sure, this long wick. Now, I did enter the trade on this, and I entered pretty much right on the break at about, I think I did it on the 4-hour, was it? Yeah, it was the 4-hour chart I entered it on, which was pretty much right around 213, I think I have it here. 214, I entered it, and I exited at just shy of 217. So that was a really good trade, made, respectable money on that, at least for the day. But we broke out of it, right? And it was looking great. This was looking like finally the move the bulls have been waiting for. But instead, what we did was we ended up rejecting and coming right back down. Now, the question might be, okay, well, if it looked like a breakout, why did you even bother selling? Like, why would you not hold this? Because this had potential to actually be the breakout and actually move up to, the 220s roughly, give or take, right? Somewhere in the 220s. I definitely thought that was a possibility. The reason I did was because once we got up to about 218, we ended up getting only a couple dollars away from the 200 moving average on the weekly, which is this green line right here. And of course, well, I'm not personally taking any chances with a stock like Tesla, the way it's performing lately, right? It's kind of one of those get in, get out situations, which seems to be the play lately for Tesla until we really find a bottom. And that's why I exited. But all in all, essentially, that's also what happened. We came up pretty close to the 200 moving average and we did get rejected, which isn't ideal. That's not what you want to be seeing as a bull. Now, like I said, there's always, the good and the bad news. Let's start off with the bad news. The bad news is, well, like I said, not only did we close the weekly candle last week below the 200 moving average, which isn't good, but so far, we're showing some slight signs of rejection. And until we can go pretty much back above 220 at least on the weekly, ideally this week, it's looking bad. It's not looking great right now. Of course, with that being said, we are in a massive area of demand, so that can potentially find some support in this general area, but we'll talk about that in the bullish aspect, right? But again, we're still getting rejected now, which is not a good sign, right? It's showing resistance, which isn't what you want to be seeing as a bull. On top of that, we have the yellow line, the yellow trend line, which is the second trend line, but we're also now technically showing some resistance towards. Again, it's just the first day of the week, right? I'm not mistaken. Sometimes I lose track of the day of the week and whatnot, but it is only Monday. So there's still a lot of time, of course. But at the moment, we are showing some rejection below this yellow trend line as well. And this is already after we broke out of this larger one over here, this kind of, larger one going upwards like this, right? So, there's a lot of things that are just really not looking too hot here for Tesla, especially with earnings coming up. Obviously, the thing with earnings is it's a pretty major catalyst, especially this one. In my opinion, this could be one of the biggest earnings calls for Tesla, for better or for worse. I'll go over that very soon as well. Kind of give you my very rough rundown as to what I'd want to hear, essentially, for Tesla to pretty much find a base and potentially even start, the rally back up. But we'll talk about that soon. But all in all, that's kind of the main thing I'm looking at on the weekly. Now, there is some potentially a good, actually, before we do that, let's talk about the next bearish thing. There's one more bearish thing, is we have a potential, not a potential, we have a literal bearish engulfing pattern, right? Now you might be wondering, what the hell is a bearish engulfing pattern? Well, it's this situation right here, where essentially, YouTube's thing for images is so not good. It's really annoying. But a bearish engulfing pattern is essentially this right here. Beautiful. Let's take a look at this right here. Hopefully you can see it properly. You can. So we have a bullish candle, right, which was Friday, right? We had a nice bullish candle, green candle, opens down here, closes down here, some wicks, whatever, it doesn't matter. The point is, it's a bullish candle. It closed in, the candle's green because it closed higher than it opened. Great. A bearish engulfing pattern is when you have the next day, in other words today, the candle pretty much engulfs, it overtakes, if you will, it overshadows, if that makes sense, that previous candle, which is Friday's candle, which currently, as you can see, pretty much doing exactly that. But more importantly is the fact that it opens higher. We opened higher, pretty much at the same price, if not higher, right? We're same thing here, right? Opens at or above the previous candle's close. Pretty much exactly what happened here. We closed last week or last Friday at 212.19. We opened today at 212.25. Pretty much right at it, right? Literally 4 cents off. Pretty much right at it. And then moving forward, we pretty much sell off throughout the day. We sell off throughout the day. And more importantly, this is the most important part, arguably, is we close, the bearish candle closes below the previous candle's open. And what happened today? We closed below the previous candle's open. The open was at 210. We closed at pretty much 208 and change. So that's a bearish engulfing candle. As if it couldn't get any more bearish. Well, we have another bearish pattern setting up over here as well. Obviously, you need follow through, like with any indicators, but that is something to be a little bit concerned about. So thankfully, that's why, I exited those shares, my trading shares. I still have shares that I'm holding, which, are getting kind of hit pretty hard right now, but I have trading shares, and those are the shares that thankfully I did exit. And now I'm just waiting. I'm not really, in a rush here, right? No rush here for sure, at least in my opinion. But with that being said, that's the bearish aspects. The bullish aspects is, well, there's a couple things. First and foremost, like I said many, many times, and I will continue saying until it's not the case anymore, we're still substantially, we're getting comically oversold now. This is getting almost to the levels of where Elon, okay, maybe not to that level yet, but we're getting comically oversold. We're getting to some pretty extreme levels here, right? We're getting to about 20 on the RSI, which is getting pretty extreme. Anything below 20 is very extreme. So keep that in mind, right? That's, we're getting some pretty substantial oversold levels. Now, obviously, you can stay oversold for a while, and just because it's oversold doesn't mean it can't go down any further. But at least in my opinion, shorting here is not the most, I don't know. It's just the risk versus reward for shorting here. It's very hard to see the risk versus reward here, mainly because it's just super duper oversold, ridiculously oversold. But with that being said, it of course is setting up some bearish patterns somehow still. So keep that in mind. We're still oversold. That's very important to understand, right? Same with the stochastic as well, which is right over here, right? Still just way down over here. It's trying so hard to find a way to cross back over and try to actually reverse, but the stock is just so weak. It's honestly kind of impressive at how weak it is. I don't think Tesla has sold off this aggressively moving into earnings, and I can't remember how long. At the very least, it goes sideways, if not run up, and then it sells off post earnings. Now we might be doing the opposite. Who knows? But that's kind of, one thing to note. We are oversold. Now, the second thing to note that might be a potentially, interesting thing to note is going to be this. So if we zoom in on the weekly over here. So one thing to note is this. So back when we bottomed all the way around over here, when we entered pretty much the same territory we were roughly in, we did go a little bit lower, of course, that 194. But essentially, you want to take a look at these two candles right here. October 23rd, October 30th, these two weekly candles, right? Notice how this October 23rd candle right here, very similar in overall behavior and just trend, if you will, to the candle that we had all the way last week, right? The way it closed, right? It's pretty much a spinning top-ish looking candle, pretty much the exact same as this one. What happened the week after? Well, overall, the week closed substantially more, positive, more bullish, right? It closed substantially higher, right? Just through raw percentages, it closed from 207 all the way up to about 220, which is a beautiful gain of 6%. But with that being said, you can see this actually pretty decent sell-off even further down first that happened, which was another drop of about 5 to 6% before the massive reversal. So take that into consideration. Don't forget, that's pretty important. Now, I believe this is the one that happened post earnings. Yes, this was the post earnings sell off. So keep that in mind, right? They had the post earnings sell offs, then we had that massive rally post earnings as well. But nonetheless, the point is the behavior, the way the candles look are very similar. So with that being said, what I'm trying to say here is we could be getting a similar situation where we had a spinning top, had a sell-off initially, potentially even further, can still go down to maybe the low, actually low 200s, literally 200 itself, very possible, maybe even tap into the 190s, maybe just get some stop losses just below 200, right? And then rally back up, also a possibility. But the point I'm trying to make is the fact that we could also have a similar sell-off like this before potentially a post-earnings rally, which is a rare thing for Tesla, but not impossible. Just figured I'd point that out. Obviously, who knows if it's actually going to happen, especially with major catalysts like earnings. Nobody knows, but just figured I'd notice that, potentially interesting resemblance there compared to what happened back there, where we also did coincidentally bottom. One thing to note that is a difference is the fact that this did pretty much constantly hold above the 200 moving average, while right now we're obviously below it. So that is a major difference, but still worth pointing out in my opinion. The squeeze indicator is still showing red circles on the weekly, hasn't picked a direction. If this picks to the downside, yeah, we're probably coming back down to the 170s pretty aggressively, which will be another move to the downside of about, 20% or so. Why isn't it letting me do this? Let me do like this. From here, go like this, which would be another move down of about 15% or so, if that happens to be the case, which is not unrealistic in my opinion. That is definitely a possibility. I don't know if it'll happen, but it is a possibility, which would essentially consistently have us, play within this overall descending kind of, channel, if you will, which would come back down to the bottom of the channel once again as we, touch the top, the bottom top, and then potentially bottom touch again over here, which again, 180s, 170s, something like that. So take that into consideration too. Also very important. Now, the main thing that you want to hear from earnings is as follows. You want to pretty much very quickly here, some hints that margins have bottomed, which is good, right? And essentially the price cuts have also bottomed. If we don't hear anything that gives some certainty to the market that those two factors have bottomed, because of course they affect EPS, and Tesla, trading at a pretty decently high price to earnings ratio, rightfully so in some aspects, don't get me wrong, but when you have price cuts that are just constantly dropping EPSs, a stock that's trading at this kind of multiple is going to start getting hit. That's just how it works, right? You're constantly dropping prices over and over and over on all the Tesla vehicles, and it's just essentially affecting the bottom line, right? And that's not great. That's not what you want to be seeing on a stock that's trading at such a price to earnings ratio, essentially. So if we get any signs that those have bottomed, I think we can finally get a relief rally, and I think Tesla might actually find some bottom, around the general level we're at right now, maybe a little bit lower. But if we do not find signs of that, or if they do not hint at any of that, or even worse, if they specifically say something along the lines of further price cuts may be necessary, 170s is next. 170. Yeah, that's 170s is next. So very important to understand. But with earnings, of course, major catalyst, who knows what will happen. Now, the final thing we'll take a look at, as usual, is going to be options flow. Now, this is where things get a little bit more interesting. Today's option flow is obviously pretty bullish. You can see here, call flow to put flow. The call flow is substantially higher than the put flow, 74% to 28%, 31 million in call flow, only 10 million in put flow. So the bullish sentiment is coming here for Tesla, which is good to see. You have a lot of unusual over here, calls coming in for Tesla. Now, the one thing I didn't mainly notice as I increased maybe the strike a little bit higher to, let's say, 200K. Actually, let's do it. How's a million looking? Let's take a quick look at a million. So one we have interesting here, it came out at 306. Actually, I missed this. This is interesting. Highly unusual. This is actually quite interesting. So we have, not too long ago, pretty much about an hour before close, we had a call come in for February 2nd, 220 strike. At the ask, which, is good. Above the ask is even better, but at the ask is great. But 3.6 million premium, which is really good to see. So pretty bullish call here, right? We have 2.2 million here, 4.9 million here, all sweeps, all calls, all for 220, 215, and some I see also for 210, but that's the main ones I'm actually noticing in the call flow. A lot of bullishness around those strike prices. You can see even here towards the end of the day, a lot of calls came in, 205 here, 210, 215, 210, 210, 215, 210, right? And they're pretty decent premiums. You have 200, almost 300K, 323, 434,000, 365,000, right? You have 357K, 238K, right? And all of them are unusual, which is essentially, cheddar flow pretty much saying that, hey, these are, pretty interesting. Might want to pay attention to these ones, which is why they're highlighted purple. Again, the link is down below if you want to try this out for yourself, 25% discount. Pretty cool app. But essentially what I'm trying to say is the flow for Tesla, the bulls are stepping in. Are they going to be right or wrong? Who knows? Nobody knows for sure. This isn't the ends all to, be all, of course, right? This can, of course, be wrong. The whales can, of course, be wrong at times as well. But there's some pretty decent call flow coming in for Tesla, some pretty respectable premiums coming in as well. So we'll see how it plays out, and we'll see what these end up actually being. Because the most interesting thing is the vast majority of them, especially these ones that just came in towards the end of the day, are for this Friday. That's the interesting part. They're all for this Friday. So with that being said, that's kind of what I'm seeing. So we'll see how it plays out at this point. Obviously, nobody knows what's actually going to happen. Earnings is a major catalyst, and this is going to be a major earnings as well. So we'll see how it plays out. But yeah, that's all I got for you guys, ladies and gentlemen, on today's video. So if you enjoyed, of course, don't forget to hit that like button. And as usual, I will see you tomorrow. Peace.